Welcome to today's webinar. My name is Sherry Ham. I'll be your facilitator today. I am part of Thomas Edison's peer support team. You'll hear about us as students at the university. Also, Amanda is with us today. She will be our host and speaker. She'll be talking about our financial well-being as students and individuals. And I'm going to turn it over to Amanda.
Thank you guys so much for attending today. We're going to be going over 10 steps for financial success. And we're going to go over a lot of different information. Like they told you, I have been working in the financial industry for over 27 years. And I've been through a lot. And the reason why I love doing financial literacy and financial coaching is because I like to see people prosper. I like to see them, if you're bankrupt, if you're having issues paying your mortgage or your rent, I like to do budget reviews for you. It's completely free. So I do a lot of financial counseling. So we're going to go over a lot of information today. Please ask me any kind of questions that you have. Please, even if you wanted to do a one-on-one with me, like I said, it's completely free for you. But we have a lot to go over today, so we'll get started. Financial prosperity, what does it mean? It means being in control of your money. So your income does not determine how successful you are. Your choices and your priorities do. So what does that mean? It just means that even though, you're going back to school, maybe you're making money, maybe you're not making money. It just all depends on what you're actually doing with your finances. Are you making sure that everything's paid off? Are you making sure your bills are paid every single month? It doesn't matter. I see a lot of people out there that are making, 100,000 to, even 150,000 to 200,000. And unfortunately, they are in debt and they will not tell you they're using a lot of credit cards. And I see some people out there making 40 to 50,000. Their bills are paid on time. Their families are fed. They have a full house of food. Nothing is late. And to me, that actually is successful. That's why I always say financial prosperity is just being in control of your money. What are you doing with it? Are you being smart with it? So the first step in being financially successful is to establish goals. And that I always teach this in any kind of financial literacy class that I do. You have to identify needs and wants. Be specific with what you want in your life. What do you want to accomplish? Do you want a home? Is that something that you want to start saving for? Do you want to go on a trip maybe? Do you want to go on vacation? Do you want a family? These are things that you have to write down. And I always say, write a list, be very specific. What do you want your goals to be? And when I say identify needs and wants, you're going to need one day a house to live in. You're going to need to, go out and, maybe rent an apartment. But we all want a new car. We all want that new perfect pocketbook, or there's things that we want in life, and you have to determine what's most important to you. And that's why I say be specific, write everything down. Make sure you have a list of what you want to do. And, someone always told me to make a board, and I had this, it was a vision board, and I used to write things that I wanted to see in my future. And I always kept it up to look at it. And those things actually came true for me. So that's something that you would, maybe want to do for yourself as well. And this has to be realistic. It has to be done with your current, income that you have coming in now. If you're paying student loans, and it can't be something that it's in the future because you don't know how much you're going to be making then. So you want to do it on the income that you're bringing in now. What do you want to see yourself buying? What do you want to see yourself reaching with these goals? Step 2 is taking stock. You want to determine where you stand and what starting point you're actually starting at right now. So what you own minus what you owe equals your net worth. So if you ever wanted to see how much your net worth is, you're going to actually you're taking a budget. And I'm going to go over that a little bit too, because the budgeting is the most important thing that you can possibly do for yourself. And what you're going to do, I have budget sheets that I can send out to everybody, but you're going to write a list of everything that you owe. And I'm talking student loans, if you have credit cards, if you have a car payment, if you're paying a mortgage right now. Some people even have like a child support, if you're paying alimony, everything is to what you owe. And then you're going to put down what you own. So say that, maybe you have, you have a house and it's worth a little bit of money, or maybe you have a savings account or you have a 401k. That's what you own. That's money that you have. And that's what you're going to subtract by, and that actually equals your net worth. That's how they figure out your net worth for yourself. It's actually important to know how much you're worth. At one point in life, I think I was worth maybe negative 5,000. So, I mean, I'm laughing at myself, but that's, you just have to determine. It's pretty funny. But we all have to, know how much we're worth at one point. And it's okay to see that you're in the negative, because at one point you're going to be in the positive. You have to make sure that you're thinking positive about finances too, as well. There's a point in life where some of us just, you hit rock bottom, or you're just, you're struggling to make it by. But at one point you are going to catch up. It's happened to everybody, and I've seen it even with financial counseling. You will catch up, but you just want to determine where you're actually at right now. Step 3 is create a spending plan and a savings plan. This right here is the most important thing, that if you're going to learn anything today, this is called a budget. It is something very important that you must do. It's something that anybody that I'm trying to help, even if they're trying to figure out why they can't pay their mortgage anymore, why they're in such financial, issues that they're having, I have them do a budget. First thing I'm going to tell everybody on here, save every receipt that you have. I don't care if you just bought a coffee at Dunkin' Donuts or you went to Wawa and you got gas, get a receipt. Save it. Save at least a month's worth of receipts, because that's the only way you're going to figure out where your money is going. Because sometimes we forget, every time we go buy that coffee, we swipe our card, and some of us don't even do a checkbook register. So you don't even realize how much money you're spending on that coffee every day. Or if you're buying food every day for lunch, or you're Ubering food to your house and stuff like that, and you're paying an extra tip. These are things that some people don't look at, and they're like, I don't understand how I don't have money to pay for a credit card and stuff like that. You need to keep receipts. You need to start writing things down. And then what you're going to do on a budget sheet, you're going to have your income and then all of your expenses. All right. And then what I do is I subtract those two together, and I come out with a bottom line. And that bottom line is either you're going to be in the red or you're going to be in the green. If you're in the green, that money that you have saved over should be put into a savings account, or should be put towards, paying off a student loan, or should be put towards, putting into a 401k or retirement savings if you don't have one right now. If you're in the red, that's where we look over and we try to figure out what happened. Where did we go wrong? What are we spending our money on that you shouldn't be spending? Are you eating out too much? Maybe you're going and getting, Starbucks instead of making coffee from home. And these are things that you really have to look at in your life, that you have to start cutting out. I know another big thing right now that's happening is we're trying to keep up with people. We're trying to keep up with, people that we see around it. And we have to stop worrying about what other people have. And I know social media is a big thing about that. But just because somebody else bought a new car doesn't mean that we have to buy that new car. And we have to be happy with the things that we already have in our life and the money that comes in, because that's all that we can afford. Most people that you see on, even on your, Facebook accounts and Instagram, a lot of them, like even when I'm doing financial counseling, a lot of it's borrowed money on credit cards and stuff like that. So you have to remember it's not real. And, people post a lot of things that are pretty fake. And I've been coming across a lot of this, especially on, Instagram and Facebook and all these different, places on your phone that you can go on, and Snapchat and all that. And I'm like, oh my God, this person just they're on this vacation again and on this vacation. And when it comes down to it and you're talking, they're like, oh yeah, well, I had to take out a loan against my 401k. Well, this is things that I don't want you having to do. That's why you have to start a savings plan. You have to see how well you're doing. Because like I said before, just because somebody else has something doesn't mean that you need it right now either. The next step, like I said, we were just going over this, is living within your means. Try to increase income. It's easier said than done. I try to tell everybody that all the time. And the only thing I could say to increase income is maybe, try selling things that you don't have. But the biggest thing, that I always tell everybody is prioritize your spending. Reduce, substitute, postpone, or forego. Do I ever say to stop living? No. you're going to have to live life. We only have one shot at this. So I always tell people, still live your life, still enjoy your family, try to go on those vacations, but prioritize. There's no reason why, if you have maybe, a huge student loan payment, or you can go on vacation with your friends, pay off that student loan first, prioritize, postpone that. But still, you can probably do something that's a little bit cheaper. Maybe just go to the beach or something, or, go somewhere that's a little bit cheaper. Try to reduce things. Try to not go out and buy that coffee all the time. Try to substitute, like I said, buying that food all the time and making food from home. And these are things that you have to look at in your life. And when you're sitting there trying to look at your finances, and some people out there are just like, I don't know what I'm doing wrong. When you really take a look at it, and I sit there with you and I'm like, okay, why did you get Uber Eats? You don't have food at home? And like, well, I could have, but it was just no. You just got to do it. And that's the one thing. I can tell you as much as I can, but you just have to do it for yourself. So these are suggested budget guidelines for you. This just means that if you have an income coming in, 35% of it should be housing for you. So if you're looking to buy a home, remember that, 35% of the income that you have should be going to your housing, to your rent. 10% should be going towards a savings account. 15% of your income coming in should be going towards transportation, and that means car payment, gas, and your insurance. Another 15% should be debt, and that's going to be your, maybe your student loans, a credit card, it could be a mortgage that you might have, or even your rent payments that you're making. And other is going to be, maybe you took out a personal loan. Maybe you took out, you have a credit card with, Old Navy, or you have an Amazon credit card account. Those are the others that are going to be out there. Okay. And this is how I kind of do a budgeting for you. And you want to kind of stick to this. But also make sure too, that you realize that right now, even to afford to buy a car is absolutely ridiculous. If you can see out there, me buying a car back in the day, my payments used to be 134. Now, some people that I'm trying to get a car for, and they're turning 18, their payments are $650 on a brand new car. And it's just absolutely insane. Buying a home, I don't know how young people are doing it right now. A house, used to cost anywhere from 250 to maybe like 300,000, and now it's anywhere from 400 to 600,000, and your taxes every single year are $11,000. I just don't know how people are doing this. But this is really a suggested budget guideline. If you wanted to stick to, something like a reality, but honestly, things have changed a lot right now because prices went up. So, but if you can stick to this kind of suggested budget, that's the best thing for you. Step 5, this is very important, is pay yourself first. And what am I talking about? So you want to make sure that when you have a paycheck coming in, no matter what, you want to make sure that your credit union or your bank takes that money from your paycheck and transfers it automatically before you even see it into a savings account. You're paying yourself first. It enables you to reach your goals. You want to save at least 10% of your income. Is that true? Can you do it? I always tell people, if you're able to even save $10 to $20 from your paycheck a week, that's actually doing a lot better than most people. I have, out of 500 people that I've financial counseled, they don't even have $500 to their name. So even if you could save right now $20 biweekly, $10, you're doing a lot better than most. And like I said before, so what happens is your paycheck is going to get direct deposited. Instead of you seeing that money in your account, it's automatically taken from your paycheck and put into a savings account. And that's how it actually works for you. So you're not doing anything. You're not, you don't even touch that money. It's just going into a savings account. Now, we offer it at a credit union. I know banks offer it for you too. You always want to pay yourself first. Paying yourself last means that you're going to pay all of your bills, and then whatever you have left over, you're going to try to put into a savings. It never happens, because that money, you're going to say, you're going to have it sitting there, and you're going to be like, well, I needed that extra money for something else. Something always comes up. So make sure with your payroll, if you do have some sort of direct deposit, you're paying yourself first all the time. So we should all have a three-tiered savings plan. We should always have a short-term liquid account, emergency savings. We should have at least a small little savings account just in case, God forbid. You always want to have even a medium-term goal, and this is 2 to 5 years, and that's going to be like if you wanted to buy a house 2 to 5 years from now. And we all want to have a long-term goal. And this is a three-tiered savings plan. So we want to make sure that you have money for retirement, you want to have money for education, and you want to at least sit with a financial advisor and have this invested somewhere. Just because if you have a long time to retirement, you can actually be in something that is, a little bit risky. It's not going to be at like a very, you want to be more aggressive with your investments and stuff like that. So this is just kind of a three-tiered savings plan that we like to go by, that you really should have goals set for each three of them. And like I said, you can do whatever you want. This is just something that, it's just a base plan for you, but make sure that you have these written down for yourself as well. Biggest thing is quick procrastinating. I can tell you so many times in life where I'm like, you know what, I'm going to do it tomorrow. I think I'm going to do it tomorrow. Never happens. Tomorrow might not come. So you want to start now. You want to decide how much to put aside and have it auto deducted from your account. Make sure you're doing this today, because you're going to sit here and say, well, you know what, I'm going to start saving by the end of the month. And then all of a sudden you're like, oh my God, I totally forgot. Compounding interest only works over a period of time. And make sure too that that your future is worth spending a little less today. So instead of you spending so much money, make sure that you realize that, your future is going to come up. It's going to be quick. Retirement comes up quickly. It's coming up quickly for me. I didn't even realize it's right around the corner. But these things come up out of nowhere. So quit procrastinating. Who knew COVID was going to happen? Who knew all these things that possibly could happen in our future? So that's why I always say, try to save now. Try to put money away for emergencies. Try to, even if you have student loans, or if you have, if you're trying to pay your rent and you're not working, full time or anything like that, whatever you have left over, try paying off the biggest bill that you have first. Try paying this stuff down. But don't, like I said, don't sit here and wait. Don't start, don't procrastinate. So I just wanted to show you the harness, the power of time. If you started actually saving now over waiting 10 years from now, so say you started saving money and it's been 30 years. This is just kind of showing you if you waited a little bit. Over 30 years, you would be close to 160,000. If you wait 10 more years to even do it because you procrastinated, you're close to only 60. So this is just to harness the power of time on how quickly your money can grow if you start saving now, as opposed to waiting another 10 years. And this is, this is something that if you're putting it into a very, the stock market and it's doing very well and nothing crashes, or we're not going to, who knows what's happening, outside of our country and all that kind of stuff. But this is just showing you, don't wait, don't procrastinate. Make sure you are doing something today. Step 6, delete your debt. Easier said than done again. I can tell everybody, we all have credit card debt. Everybody like I've seen it's just credit card debt is getting worse out there. The only thing I can always say when you have debt and how to delete it is try to reduce the interest rates. The only thing I can tell you to do is you can call your credit card companies and talk with them and explain to them your financial situation. A lot of times, I'm going to be honest, they don't really work with you because they don't care. And always remember too, with your credit card debt, credit cards are not extra income. Your credit card is a company that's trying to make you use a little plastic square on purchases that you really, it's not your extra income. You're going to still have to owe them no matter what you do. And I always have to tell people a lot of times, like they'll sit here and be like, well, I have 50,000 in, credit card out there that I can use if there's an emergency. Right. But you have to pay them back. That's not your cash. So you can't count that as extra income, and nobody should. And we shouldn't be owing these credit card companies because they really don't care about any of us at all. That's why they keep on raising the interest rates. So you want to try to increase your payments. If you have student loans out there, make sure that you do realize too, that with your loan payments, if you are a federal student loan, that you can try to see if you can get that forgiveness debt out there. Also, too, that you remember too, when you do have student loans, you can actually put on your taxes the interest that you are paying for your student loans. So, make sure that you are looking at that too as well, just to get, a little bit of extra money, because that extra money you're getting back from your taxes, you can actually put towards a payment for your student loan. Try to, prioritize your retirement savings. Try to do, like I said, the automated savings accounts into your savings for yourself. But you want to try to aggressively repay your most expensive debts. For me, the best thing that I always do is that when I have a credit card, I like to pay off my smallest credit card first, because it just makes me feel good that it's paid off. And then I work on the biggest ones. But a lot of times, if you have a credit card out there right now that's the interest rate's at like 30%, you want to try to get that paid off as soon as possible. So I always say, try to, send them extra payments. If you get a tax return, try just sending them extra payments as much as you can. Bad debt versus okay debt. There are different types of debt out there too that you have to look at. So having debt on your credit report is actually a good thing, because it actually increases your credit score. So when you have debt on your credit report, you want to make sure that it's like maybe a home or education. That actually is showing a good sign on your credit report for yourself. Bad debt actually on your credit report is usually like vacations. Say you go on a vacation and you use your credit card. Think about it. You went on vacation last year, your vacation's still on that credit card, and you're paying a 30% interest rate on it. And you were there last year. Think of how expensive that vacation is costing you. That's why I always say, when you go and use a credit card for anything like food shopping or gas, or you go to a restaurant and you're paying for your friends to go to a restaurant and you can't pay it off at the end of the month, that food is out of your system after a day. And now you're paying 30% on food you ate a month ago. So that bill that you paid maybe for $100 is now up to what, $200? It's just, these are things that you have to look at when you're trying to use credit cards, okay? And the abuse of credit is a leading cause of financial failure. It's happening everywhere. I've seen it a million times. People don't realize, like I said before, they use credit cards as extra income, and it's actually not at all. Step 7, buy a home. There's a lot of advantages of, building equity over time and getting tax breaks. You could start saving now and building a really good credit score for yourself. Home ownership is not right for everyone. So you have to remember, because right now to buy a home is absolutely ridiculous. I've never seen house prices that high or interest rates that high to even buy a home. Some people can't even afford to do that. So maybe renting, but even rents are really high right now. I don't know. I feel bad for everybody even trying to look for a home. I feel bad for anybody that's trying to rent right now. My biggest thing is, I always say, do you know anybody you can move in with? Because it's absolutely insane. I don't know how anybody's actually able to do it right now. That's why even if someone was like, I could, stay with a friend, or, I can find people that I can move in with, that's your best advantage if you're trying to look for a home right now. But if you are able to buy a home, that's amazing. I think that's awesome, and that's great for you. Just, make sure that you have enough money for your down payment. Make sure that your credit is in good standing. Always remember, when you do buy a home and you're going for a mortgage, and you're trying to apply for that mortgage right now, and it's you, maybe it's your spouse or a fiance or someone you're moving in with, we always use the lowest credit score first. People don't know that. So you want to make sure that both of your credits are good. And when you do apply for a home, you never sit there and go buy furniture or use any of your credit at all until the mortgage is closed and signed and you're moving into the house. Because once we see you start purchasing and your credit score starts dropping, we can actually deny your mortgage altogether. So these are just things to look at if you are looking into buying a home. Step 8, diversify. You have to weigh your risk against return. Make sure if you are going out there and you're putting money into stock markets, there's stocks, there's bonds. There's the cash flow out there. There's mutual funds. Just make sure, you're weighing your risk against return. Make sure that if you are in a 401k, or you have maybe a IRA out there, and it's with a financial advisor, make sure that it is diversified. You're not all into one company. You didn't put all of your money into Dogecoin. You didn't put all your money into this cryptocurrency, because you see that it fluctuates constantly. You want to make sure that your money's sitting somewhere in a mutual fund. A lot of times mutual funds do diversify for you. So these are things that you want to look into. You could get bonds. There's bonds out there that are very safe for you. You do see a cash, you can do cash. Cash is just, putting your money into like a money market or something like that. But you want to make sure that you're looking into all this stuff too when you're looking into retirement accounts, or if you want to put some of your money into the stock market. Biggest thing I always say for everybody, step 9, plan ahead. You all need to have insurance. Make sure
Amanda,
yes,
excuse me just a second. We have a
sure,
question and I know the answer, but I think they probably want to hear it from you.
got
Um,
it.
is there anything negative about not having any credit card or loans? This individual says they've never even looked at their credit bureau report.
So yes. All right. So I'm going to go over this. Yes. Everybody needs to look at their credit score. Everybody needs to know what number they have, because the only way you're going to get any kind of insurance, you're going to get any kind of car loan or mortgage, is to know what your credit score is. So if you don't have credit and you've never used it before, this is a very great question. And I don't mean to scare anybody on here, but you have to realize there's a lot of identity theft going on. So if you've never looked at your credit report before, you don't know what's on it. And I tell everybody all the time that you should be looking at it at least once a year. And it's annualcreditreport.com. And it's just the most important thing that I can tell anybody on this webinar today. You should have credit. You should be trying to plan on getting credit. And if you don't have it, there's a lot of easy ways that I can help you if you need to. You can even go to any kind of bank. You can go to a credit union, and you can actually apply what is called it's a secured credit card. And what that means is you put money into a savings account, and we give you a credit card for that amount that you have in a savings. And once you start using your credit card monthly and you're paying it back, it actually establishes credit for you. And it's actually pretty quick. So you definitely want to make sure that you're establishing credit. You want to make sure that you're checking your credit report at least once a year. Even if you go on Credit Karma, which is not technically your FICO score, it's a Vantage score, which they're two different. You still want to just make sure that you're looking at something. Even if you don't even have a credit card, I would say just try to go on. It's called annualcreditreport.com. It's the only one I tell anybody to go on to. It's completely free. And just check one of them. Go on Experian, go on TransUnion, or go on Equifax, and just check it and print that whole thing out for yourself. It's the most important thing I can tell you to do right now, just because, like I said, of identity theft is running rampant throughout this country. And there's a lot of ways that, you want to make sure that you're checking this, like I said, once a year. But if you guys have any questions, please go ask away. But step 9, like I said, for insurance, make sure that you have different insurances out there. Make sure you have health insurance on yourself. If not, the state offers health insurance. There's plans out there for you. Disability, you can look into it. If you can't really afford it, it's not something that's immediately, that you need right away. But if you are planning on having a family, life insurance is very important. I even got it on my children when they were 5 years old. I have twins, so I made sure that I got a whole life insurance policy for them when they were 5. So by the time they're 18, they'll never have to pay a premium, because their life insurance pays for it by the time they're 18. So these are things you're going to look into. You want to look into auto insurance. If you have if you're renting, or renter's insurance, there's homeowner's insurance, but make sure you realize that they'll bundle all that together. If you want to, that will give you a little bit of a lower rate. I know a lot of insurances are completely crazy and they're so expensive right now. So you want to shop around and make sure that you're getting the best plan and the best, insurance out there for yourself. Plan ahead too. There is estate planning out there. I have a will because I have children. I have two twin girls. So I made sure that I have a will set out for me because I'm afraid I don't want them to go to somebody that I don't want, God forbid something happens to me. So if you're a little bit older, I'm 45 years old. So I made sure I had my wills. I had a will done. And I actually did it right online for $39.99. And I went to I had somebody at the bank actually, they actually did the seal for me. So just think about it. You could do a will right online. There's AI programs that will do it right for you. It's so quick, but just make sure that you have one. Make sure because if you do have things out there that you want going to certain people, if anything ever happens to you, and you all have to remember life is short. We don't know the date that, unfortunately, we're all going to die. We know that. And I don't mean to be grim, but it's the truth. You want to make sure that you're prepared and you want to make sure the things that you own go to people that you love. So make sure you have wills. You literally can go right onto like Chat GPT and say, I need to do a will, and it does it for you. And it will bring up the amount, and I paid $40 for it. And like I said, I went to a bank, they notarized it, it's done. We sent it in, and they have a copy right now with the state. It was that easy. You can do trusts. You can also do documents, for life-saving measures. I actually have one just in case, medically, do not resuscitate, but, only if I was going to be a vegetable. So I made sure that I had all that stuff. And this was just because I'm thinking of my children. And I don't want them to have to make those decisions. I wanted them done, now. And I was thinking of them for the future too. So they didn't have to make all these decisions for themselves. And the biggest step is step 10 is get help. I can't tell you how many people don't think financial, counseling, they never thought that there was something like this out there. You'll go and get yourself help mentally, or you'll go get yourself help by a doctor because you don't feel good. But what about your finances? Money rules us. Money is the number one thing that we have to look at every single day. What's the one thing we go to college for? You want to make money, and no one thinks that you need professional help. Well, people do need professional help. I needed it. I went through a bankruptcy. I was divorced. I had two little girls that me and my daughters ran away when they were 5 at a bad situation, and I was left with nothing. So I needed financial help because I was living by myself. We had to run away to Hamilton, Trenton area, and I had to start over 10 years ago. And I did it because I got professional help. I had a financial counselor actually help me get back on my feet and start all over again by myself. And I did it. That's why I always try to do these for you guys too, because if I can do it, anybody can. And learn on your own. The internet, AI, they're the biggest things that you can learn from. There's so many different seminars. There's so many different books and magazines out there. Make sure you're learning. Make sure you're finding out, getting help and support for your finances and stuff like that too. But I just want to tell everybody, thank you so much. And an investment in knowledge and always pays the best interest. That was from Ben Franklin. But I just want to thank everybody for being on here. And if you have any questions, please ask. This is my email address if anybody ever wants to talk or they need financial counseling.
All right, Amanda, we had a question in the QA. It says,
Sure.
Is it possible to qualify for a small business loan to start a business if you're still taking classes?
So in order to get a small business loan, you have to actually be in business for 2 years. So you would actually have to get yourself pretty much a personal loan first to start it with. And then once you're in business for 2 years, you can do a business loan. That's how it works. So you would pay off. So how it would work is you would start the business. First, you would have to get yourself a personal loan. This is going to go against your own credit. All right. This is going to go against your own name. You go into business for 2 years. Then you apply for the business loan. It pays off the personal loan for you. That's how it would work.
All right. The next question we have is, what's the best strategy for managing student loan debt while we're still in school?
So the best strategy to handle that is to really, any kind of extra income that you have coming in. And I'm talking about, like I said, tax returns, any extra income at the end of the month, is try to paying off that student loan the best that you can and putting that extra money towards it. Remember too, any kind of, when you're doing taxes, the income that you are actually, you can actually deduct your student loan interest paid on during the year on your taxes. So that extra money that you're putting towards that you're getting out from your tax return should go to your student loan. There is loan forgiveness programs out there that you can possibly look at. But also, too, just remember there's also employee assistance programs. So working at, I think it's for some of the state departments. So some of the states, if you work there for at least 7 to 10 years, they actually help you pay off your student loans. So you want to look into these programs when you're looking for employers out there. But like I said, any extra money that you have, I would definitely, no matter what it is, if you have like maybe an extra $50 to $100 at the end of the month, put that towards your student loan. But also too, if you also want to put money into savings. So like I said before, have that auto pay come from your paycheck, maybe $5, $10. And then after you pay all your bills, if you have the extra money, put that towards your student loan to get that paid off.
Great. And we've talked a little bit about the credit score, but why does it matter for our future financial goals?
So credit scores matter because let me explain to you. When I was bankrupt back in the day, and bankruptcy, just so you know, wipes your credit away. So I had no credit whatsoever. Even working for a financial institution, they weren't going to hire me. You had to write a letter. I had to write a letter explaining why I had no credit and I went through bankruptcy, because financial institutions look at a bad credit score as you or might actually steal money or do something like that. So you have to remember these things when you're looking at credit scores. They want to make sure that they see that you're able to pay your bills, because why would they hire you if you're not financially capable? So these are things that you have to look at when you're looking at, credit scores. Also, too, when you go get car insurance, when you go get anything like that, they are basing it on, your credit scores, or, they're looking at how you're making your payments and everything to actually get you insurance. So these are things that you have to put in your mind and understand. Like, that's why your credit scores are so important, to make sure that you're looking at them, every single, every single day that I'm sorry, every single year. You want to make sure that you're looking at what your credit score is. You can download Credit Karma if you want to, but again, like I was saying, that is different than your FICO score. That is a Vantage score, but they kind of run around the same amount for yourselves, but you just want to make sure that you're checking on it.
All right. We had, does my credit from my younger years, my mortgage, my car loan count in my senior years?
Yes. So it's your credit, no matter what you did, when you were younger, no matter what you have, no matter what you were doing, is always going to be on your credit score. Your credit score in any kind of payments you made stay on there indefinitely. But anything bad that happens, say you forgot to make a payment, or you missed a credit card payment, that stays on your credit report for 7 to 10 years. Then it will fall off. So my bankruptcy was 10 years ago. It finally just fell off and my score went up a little bit. So anything that you did prior or younger that was good is going to be on there indefinitely. But anything bad usually drops off within, like I said, 7 to 10 years.
Um, is there a resource to reach out to for predatory bank practices?
Um, I can get that information for you. Yes. If there was something that happened, you can, if you want, I can find somebody that you can reach out to actually through the state that we work with, because we're the state's credit union, that we can send you information to. I know there is a state department, even in the state of the Treasury Department, that I can send information over to them. If they want to send me an email, I can get that information for you.
Yeah, and we've had a couple people say they'd like some financial advice, so please make sure that you're emailing Amanda directly at the email she's
Yes,
provided, agriffith@cunj.org. Mhm. All right, I
perfect.
think that's it for our questions. Is there anyone else that has any questions? All right. If not, Amanda, thank you so much for, what is the designation CCUFC?
So I am a certified credit union financial counselor. So I had to go and get certified for counseling through the credit union. It took me about 2 years, but I am certified. I can do budgeting. I do credit reviews. I do anything by trying to bring up your credit score for you. I do one-on-ones, even just try to help you, just get you kind of back out of that anxiety, not being able to sleep. Some people can't even sleep because their finances are so bad. So that's what I'm here to do with you on a weekly to daily basis, some people.
All right. Anything else from the audience? All right. If not, again, Amanda, thank you so much for your time, and attendees. The slides will be sent to you. We'll have your email addresses, so those will be forwarded to you, and you can reach out directly to Amanda with any additional questions.
Perfect. Thank you guys so much.